Hey everyone, this is Mark from Stocks and Cash, February 25th, 2018. Here with your market update. Going to go through market analysis, tell you what my holdings are, and then some potential setups for tomorrow. So let's take a look at the SPY. If you watch my videos, you'll know that on Thursday I said I thought we were going to get some more sideways action like we did for most of the week. And it was kind of shaping up that way, and then the last couple hours we just kind of took off. Let's zoom in on that real quick. So this is the open on Friday. We kind of meandered. We're up a little bit and then kind of settled out, and then we just kind of took off. Once we broke out above this level here around 245, we just kind of took off for the rest of the day. Volume was pretty strong on the last 5-minute candle. That being said, volume overall wasn't super strong. It was probably around average for what the SPY normally does. So you can see we were down here. If we zoom out to the 3-year, and it's going to be tough to see, but volume for the last year or so has been lower than it was back here in 2016 and 17 time frame. Well, I guess that's more 2016, but the 2017 time frame where we closed kind of right above average. You can kind of see the line, my cursor line here as it's going through. Let me zoom in a little bit more so you can see it a little more clearly. That line is above the volume lines a lot of the way. So I would consider it about average volume. You'd like to see stronger volume on moves like this for confirmation. I have seen a lot of bearish talk, both on stock twits and just reading, Seeking Alpha and some other stock news sites. That being said, looking at these charts, it's hard for me to envision bearishness after this candle on Friday. Not to say that it couldn't happen. We could open up and sell right off. We could gap down tomorrow and continue on down. But we're above all of our moving averages. The MACD has crossed over. Stochastics are strong, bullish. RSI is pointing up. From a technical standpoint, it's really hard to argue against this move on Friday. I didn't buy any SPY calls or anything like that. I did buy some things which we'll get into later, but again, it's really hard for me to see bearishness based on the move on Friday. Taking a look at the Qs, even stronger. We were well above the our warning zone here, well above the moving averages. We kind of came back to the 8. As I've mentioned before, we don't like to be, or the stocks don't like to be too far away from the 8 exponential moving averages. They came back to it and then bounced off from there on Friday. I really do see 171 or so coming back into play on the Qs. I mean, we're not far off from it, only about $3, so certainly looks attainable. MACD has crossed over. Volume was pretty strong. Not as strong as these down days, but there was a lot of volatility, a lot of buying and selling going on there. But on a day that was pretty much a bullish day, decent volume. So again, I can't see the bearish sentiment. I'm confidently bullish. Whether that's false sense of security, I don't know. And it's possible we could hit these levels and get rejected. This could be a double top potentially. I'm not ruling that out. But right now, this move has been strong. We've had some sideways movement to give the market a rest, and then we took off. So I personally don't see any reason why we can't continue on up on Friday. On Monday. Let's take a look at some of my holdings. Walmart. I'm short on Walmart. It didn't do me any favors today. I'm looking to get out if we close above these two candles, the highs of these two candles. I probably bought too late into this move, especially if the market's a green tomorrow. I would expect Walmart to rally. Not something that you'd want to buy necessarily unless you're interested in buying it at very low pivots with a lot of resistance above. and that's fine if that's your trading plan. But for me personally, if we get above here, around a dollar more or so, 63, 69, I'll be out. So not even a dollar, about 70, 80 cents. Still, I'm about 30% down on this one, unfortunately, but it is what it is. So at the end of the day, yesterday I bought a few names. Apple, just a couple calls. We're comfortably above our exponential moving averages. Looking at it, I'm a little concerned at how far away we are from the 8, as I mentioned earlier. Stocks and daily candles like to stay close to the 8 exponential moving averages average, and when it gets further away from it, it tends to want to come back to it. Whether that means staying sideways and then letting it come up to the stock, or if the stock pulls back to touch it and then bounce up. So, Apple's looking strong. It has looked very strong since the bounce here, since the market sold off. I wouldn't be surprised if we do get back here to 180, but there may be some sideways to downward action, prior to getting up there. Given that I'm swing trading and my tolerance, I'll probably have my stop at the low of Friday's candle, and we'll see what happens there. Couple other names, Tiffany's broke out of this warning area here, and it never really got below it, which is encouraging as well. We're above our exponential moving averages. MACD is trying to cross over. It's almost there. Stochs are looking strong, as are the RSI, so bought a couple calls here on Tiffany's. Let me see a couple others. Caterpillar, kind of similar situation to Tiffany's, although we did get below the Fibonacci retracement levels on Caterpillar, because we broke the previous trend, which would be from here to here. Redrawn, we are through our warning area, popped our head above it, firmly above the exponential moving averages. MACD is crossed over. Everything's kind of lining up. Volume was a little poor, less than I'd like to see on a move up like this for a breakout. So, cautious on this one. But if we continue on tomorrow, maybe we start our uptrend to retest these highs here of 173 zone. Alibaba, as I mentioned the other day, potentially making a head and shoulders pattern. Left shoulder, head, right shoulder. We are slightly above the left shoulder here. Not to say that the shoulders have to be exactly the same, but it looks like we're starting to make an upward trend. MACD is crossed over. Stochs and RSI are looking strong again. Volume could have been better. I did nibble on a couple calls here. There is a gap here. Gaps tend to like to fill. Whether that fills this week or next week or maybe a year from now, we don't know. But gaps do tend to like to fill, so I'd be looking at a target here. First target of 202, about a $10 move potentially in BABA to fill that gap. And then whether we go out higher or not, we'll see. But that's my thinking on BABA, is filling this gap, hopefully sooner rather than later. That's it for what I am currently in. Let's take a look at some potential setups for tomorrow. I have 4 breakout moves potentially, and then 4 that are kind of looking like Caterpillar and BABA and Tiffany's. So let's look at PayPal. Oops. PayPal also you could kind of potentially see it being a head and shoulders pattern, maybe. But again, there's a gap here similar to Alibaba. As I said, gaps like to fill, so I would I'm not in PayPal, but tomorrow morning, if we have a decent market, we close above the first 5-minute candle, or get a close above the first 5-minute candle on the 5-minute chart, I'd be willing to take a couple calls here, see if we get up to 83.97 or so, $84. Nothing's guaranteed, of course, but it's looking strong. Stochs are very strong. MACD's crossed over. RSI is looking strong bullishly as well. We've just barely peeked our head over this fib retracement line. So if I was going to get in this trade, I would put my stop below the low of the first 5-minute candle, assuming that I did get into it. And then we'd see if we have a melt up in the market today. And that's kind of going to be the strategy for these next few stocks as well. So Intel, INTC, another tech stock. You notice there's been a few techs. Apple and Alibaba, Intel. I don't want to be all in one sector, so I probably would only take either the PayPal or the Intel trade. I don't think I would take both. Intel also we can potentially see being in a head and shoulders pattern, which again is bearish if it plays out. And that's a big if. You know, we would have to roll over from here, break the neckline, and then see where we go from there. But again, I'm not quite seeing it. But again, nothing saying that we can't roll over tomorrow. But to just blindly take that bet on a big bullish candle to me is kind of foolish. So I'm just trying to play what the market's given us. It looks strong, looks bullish. Again, volume could have been better. That's my one concern. But the other indicators are showing that we're moving bullishly. So I would keep an eye on Intel first 5-minute candle. See if we can get back to these recent highs of 50.85. And again, I'm not expecting that tomorrow, but over the course of the week or two, I'm trying to get back there. Coles is another one. So we came into our warning zone here, cleared up above it. Not a whole lot of room between here and the recent highs. Only about a $2 move, basically, $2.50. But then we could potentially break out, get to 72 and 75. The reason I like Coles, aside from the chart looking pretty good, excuse me, is that it's retail. I guess Tiffany's is probably considered retail as well. My idea would be to try and diversify, not have everything all in one sector in case that sector goes bad. You could have a case where the market overall is up, but a particular sector is down, and that's why you kind of want to avoid being in all in that just one sector. So anyway, Coles is a potential option. And then another one, Seagate, which before this little crash I was liking. It looked pretty strong. Now this gap hasn't filled yet. Certainly there's nothing to indicate that we're going to reverse and fill it anytime soon. MACD hasn't quite turned over yet. Stochs are looking up. RSI is looking bullish. Again, volume not too great, but it has been lower. Also been much higher as well. We had a nice strong candle. We're out of the warning zone. I'd be looking to get back to these recent highs, 56.73, about a $3 move, and then up to 59 or 63 even, if we get through this breakout level and try and hit our next targets. The last four I'm going to look at here are breakout plays. I'm not going to spend too much time on them. These are something you might want to consider getting into at the end of the day. If we have a strong market, we strongly close above them. I mean, not too far, If JP Morgan has a big strong close all the way up to, let's say 120.50 or so, you might want to be cautious about getting in just because it's so close to that first target. That's not to say that we couldn't move on to the second target. It's just a little more risky. So what you would ideally like is, maybe another candle similar to this where we close around like 118.5. That gives us more opportunity to ride up. But we do get that solid close, and we have about 5 or 10 minutes left in the market. It's looking pretty strong. That's where you'd want to enter into this trade bullishly. Another name is MasterCard. It's trying to break out. I've been looking at this one for a while. It failed to break out here. It looks like it's going to try again. We'll see. MACD is bullish. Stochs are kind of over bought, but they can live up here in that range. And then the RSI is looking strong. Let me just go back to JP Morgan to show you the indicators. So they're looking pretty strong. Stochs are definitely overbought, but again, that's livable. RSI is looking bullish, and then MACD is looking pretty convincingly bullish as it's crossed over here. So decent opportunity there. A couple more. Let's see, LULU. It's tried quite a bit over the last few weeks, just banging off this level. Can't quite close above the 81.80 level. But if we do get a close, I think there's a lot of room for this guy to run. We've consolidated here. You'd like to see some good volume on the breakout. But if it does break out, there's a lot of room for it to run, as I said, all the way up to 92 or so. So you're looking at about a $10 move for a pretty low risk. You probably risk about $2. At the low of these. Oops. at the low of these candles here. You know, risk about $2 for a potential $10 gain. That's a 5-to-1 risk to reward trade. The only thing that concerns me is that MACD did cross over. It's looking kind of sluggish, but if we do get that close, I think you'd start seeing, you know, a nicer, more clearly defined bullishly MACD. So let's see if we do get that close, and it's something you'd want to get into again at the end of the day. Last one, Netflix. Netflix has been very strong. It is another tech name, so again, we just want to be careful not to get too much into all one sector. But if we get a close above 287.46, you could see potential targets of 302 or so, and then 320. MACD is trying to cross over. If we get a close above there strongly, it should cross over. You know, and RSI is bullish. Stochs are overbought but bullish. And while we're at it, let's talk about Tesla. Again, another tech stock. You know, we're almost to this breakout level of 360.62. If we get there, I definitely can see potential to get to 378.49. Probably a next resistance is 389.61, and then our end goal would be 400. So about a $40 of room there. Again, we want to get a nice close above this, you know, this recent high of 360.62. If we do, potential for this to run. The indicators are starting to look strong again. The move was pretty decent in terms of volume on Friday. So I think Tesla definitely has some room to run as well. If anyone has any questions or comments, please let me know. Love to hear from you. Otherwise, have a great night and enjoy your trading day.